All right, welcome to bullwaves.org. This is the bullwaves.org YouTube channel. Here is the website. If you want nightly Elliott wave analysis and you like what I do, head over there and check it out. I update every night shortly after the close of the US market. And I basically give you the rundown of what I thought on the day, including charts. So if you're interested in that, check it out. It's there for you. Okay, so let's move on after that. Not a shameless plug. I'm supposed to be here plugging myself. It's not shameless at all. It's fully legitimate. Okay, here we go. Yes, now let's get something on the screen there and move on. I'm going to start with the $FX, and from there we'll move on to what people are kind of interested in. I don't know why people aren't interested in $FX, but I am. Okay. The FX market is way bigger than the stock market and precious metal market combined, so you should be interested. Okay, here is euro dollar. For the longest time, I have been looking for this wave B to complete. I had for the longest time thought that this was going to be a long triangle, expecting a rally. I think I was expecting a rally up until about 120 in a D wave. Now the triangle has been more or less ruled out. I am now expecting a rally in wave C of B, and we should break 125 at a minimum, I think, once this is complete. And then we'll have a nice zigzag correction higher in wave B. Okay, so here is a 4-hour chart. You can see what we're looking at here is the reversal pattern of this wave B low. The action off the low so far has been quite encouraging. So let's say the larger scenario is now in play. So we could be looking at a rally over the next 6 months or a year or so up to around that 125 level. So don't be surprised if it happens. Okay, here is the hourly count, and this is the count I've been working on all week. Every night, if you're on the nightly updates, you can see that. We are tracking this 5-wave pattern higher in wave 1 of C. Now, this wave 1 has a possible top in place at 107.87. Not quite sure about that because it's a little bit, it's a little less impulsive than you would like to complete a 5th wave. So at the moment, I'm going for an expanded flat complex wave 4 correction. And now we're running higher in wave 5 of 1. So this 5th wave should complete at a minimum at a break of that 107.87 high. Probably targeting that 100% level there at 108.40. That is where wave 5 in blue reaches equality with wave 1 in blue. And that's 5 waves up complete. I'll be looking for 3 waves down next week then in wave 2. And we'll probably challenge that 4th wave low, 106.27 again. So again, if you're on the nightly updates, you'll see this happening every night. Okay, or unfolding every night. Let's move on. This is cable. Cable slightly different. Not expecting a long run up in cable as I am in euro dollar, to be honest. I think we might see a divergence happening pretty soon. I think first of all we'll get 3 waves up in wave 4 and then another decline in wave 5. That wave 5 should complete a 3rd wave, and then we'll probably get a run higher again in a 4th wave. So it'll be it'll be sideways to slightly higher in the longer term here. I think it's going to be quite a bit choppier in cable as it is going to be in euro dollar. A little bit of divergence going on there. Eventually, I think the dollar will king both of these European currencies, this side of the bank currencies, and I think eventually, we're talking years away, I think cable will fall below parity again. Okay, here we go. The hourly chart on cable. I'm looking for 3 waves up in wave 4, and that's what I'm tracking right now. We've got A, B, C in wave A, A, B, C in wave B, and now looking at 1, 2, 3, 4, 5 wave pattern higher in wave C. Targeting possibly 129. That's where wave C in green will reach equality with wave A in green, and that's kind of will fill out a trend channel, and at that point then I'll look for a return lower into wave 5. Okay, dollar yen is not as simple. I am looking for a medium-term correction down in wave 2 anyway, so this second wave I think will probably fall back into around that 116, 114 range. It's been a reasonable decline off the high, but the rally this week has kind of thrown the cat amongst the pigeons a little bit. We don't have a new high yet, so obviously the main count is for a downside correction in wave 2, and that's still in play, despite the fact that we have this spike rally this week. It's quite an impulsive looking rally. If we go to the hourly count here, you can see there is a couple of ways of viewing this. You could go ABC down in A, and ABC up in B, and then wave C down, which is a viable alternate. I have gone with a larger 3-wave decline in wave A, a kind of a tighter wave B here, but nonetheless, it's still a, let's say, similar pattern in the fact that we're both looking at a B wave top here. But we've got an alternate wave A there, maybe an expanded flat wave B, and maybe that's more fitting, I don't know. We have a 78.6 retracement at yesterday's high, but I would like to see a decline now begin in 5 waves next week, and that would be tracing out wave C down. I think we will fall, if we look down here, we'll probably fall back below 125 in wave C, probably a little bit further. So looking for about 500 points in wave C at a minimum, I would suggest at this point. So let's see if this 78.6 retracement holds and we begin a 5-wave decline in wave 1 of C today. Okay. So here is the 4-hour count in the Dow. Still working with that 1-2-1-2 pattern. It is, with just like any clearing rally within a bear market, they are usually quite steep. They are usually quite sharp, and especially at the top of a turn into a bear market, the counter trend rallies can tend to be a bit vicious, as I am learning, and as we all are learning throughout history, tend to be quite vicious, and they do tend to turn the tide of opinion back in favor of the bull market again. So I don't know if you have been seeing those kind of hints or those suggestions in news media or let's say the financial media at least, that that the Dow and this S&P have regained most of their a significant percentage of the declines, and all we've done right now is just correct into a simple bear market, 20% down, and now we're off to the races again. I always love to hear them come out with that. They deny when a market declines, they deny completely flat out that it is a bear market, that you're turning into a bear market. The second you reach 20%, they say, right, bear market's over because we've technically reached what we call the end of a bear market. That's 20%. Now let's rally. So it's like a self-fulfilling prophecy. Those prophets of Baal, you know what's coming for you. These, it's like CNBC and Bloomberg and CNN, all those ones. They're so amazing at how they double speak. But I suppose they are industry rats. They have to spill the industry spew, and the industry keeps needing to sell financial assets until the game is completely up. And I think the game's completely up. This is a bear market rally in my book. The only kind of question is how you split it in here in terms of the pattern. But I think we're in a second wave rally here. Okay, enough of a splurge. I'm looking at a possible A, B, C, and we've got an extended C wave here in wave 2. Well, we haven't topped to a new high. I was previously looking at that as wave 2 high, and then the initial kind of soundings of a reversal this week, but the reversal didn't materialize, and now we have a most likely a corrective decline in a fourth wave and a spike to a new high in a fifth wave. And we will see how this fares out next week. There is still every chance that we have a larger sideways pattern building here. I don't know. This is just, you know, we kind of have to just have to go with the flow here and see on the balance of probabilities which way the market is about to tilt. I think in terms of, you know, I like to listen to, you know, David Rosenberg and, you know, Jeremy Grantham, and maybe I have filled my pot too full of, you know, confirming people who confirm my biases, but you know, the overwhelming, let's say, data push is lately anyway is tilting towards, at the very least, a strong recession coming our way. At the very least, a strong recession will take the market down further, but I don't think this is just going to be a strong recession. I think the recession actually started in 2019. Now, you might think I'm a complete fool on that one, but if you look at the actual data, the US was in recession in 2019 if it wasn't for the federal government's deficit spending 6% of GDP. They were actually, the US was going to be a -3 economy, negative 3-point economy in 2019, but the spigot was turned on, the Fed reversed, the government splurged, and you turned a -3 economy into a +3 economy by bridging the gap with that's plainly deficit spending. They borrowed and spent 6% of GDP to pull the economy back to a plus number again. And then you had 2020, which was an all-out splurge across the whole entire world. 2021, a follow of that, and here we are bleeding in the initial first half of 2022. Everything has run out. The cannons are dry. There is no ammo left. It's all been sent to Ukraine. There's nothing left to fight this battle, and I'm not laughing at Ukraine. This is a horrendous. We've just lined ourselves up for a horrendous, most likely a depression, and God help us when this actually gets going. So I think we're topping in a wave 2. Let's see if we get an initial move down into wave 3 again next week. Why do I talk about the economy when I'm actually talking about the stock market? Because the stock market is a reflection of the economy. It's it's how we value our own reflection. Basically, it's Narcissus staring into the pool, and he's about to fall. Okay, let's move on. This is gold. I am tentatively turning quite bullish on gold now. I think we have 5 waves up in wave 1. We have a clear 3-wave pattern in wave 2, and now we're working on 5 waves up in wave 1, and we'll get a 3. I think we'll get a 3-wave decline next week. If we get a 3-wave decline into this rising line here, this rising trend line, then we're forming a pretty robust low in gold. You know, you've been long enough hearing me talk about further declines in gold, and now here I am reversing, talking about further rallies in gold. But I think the rally in gold may be just beginning now. The only caveat on this one is if a serious downdraft in the stock market and, you know, the debt markets as well actually take gold down with it, you know, where, you know, it's a complete rush into short-term treasuries and short-term, or, you know, cash. If that happens, then I think gold will probably take a sell-off as well. But anyway, we'll deal with that if it happens. So far, we've got this nice bullish pattern building, and let's see if that holds next week. In terms of 4-hour count, we've got this larger 1-2 pattern that is now reversing. You can see a pretty solid reversal so far. We haven't retraced much of the decline yet, but we do have 3 waves down and a solid base building. So turning bullish on gold, that's for sure. Okay, here is crude oil. Looking for a top in crude oil again this week. We do seem to have an initial step down in 5 waves off this C wave rally. Oh, I was looking at an ending diagonal C wave, and we had an ending diagonal, pretty standard ending diagonal pattern. We had a throw over the top line, top trend line. We had a break of the wave A high, so we've got wave C complete, A, B, C, and now we have a reversal pattern building. So I think, crude will, there's no doubt about it, that crude will decline precipitously if the US goes into recession. And we are just on the doorstep of a recession in the US. I think it's already started, actually, to be honest. If the market cracks, realizing that the recession is already underway, then crude oil is going to go. It doesn't. I don't care what sort of inflation story you've got. The demand story will be gone. Nobody will be willing to buy, a demand-led economy, or commodity futures on it anyway. You don't want to be holding tankers full of crude oil if the economy is crashing, and that's exactly what happened in 2020. And we had negative oil prices. Hey, I'll tell you what. If we get negative oil again, buy the heck out of it. Hey, you traders out there that I know you listen to this. You guys that are trading oil, if you get you see a negative contract come up, buy the damn thing and hold on to it. Man the ship yourself if you have to. But I think you may well see that before we see, all out runaway inflation in crude oil prices. I really don't think that that's baked into the cake here, to be honest. Okay, that's what I'm looking at. Here's the hourly chart. And by the way, if you want me to come and speak at your luxurious dinner in Dubai, hey, call me and pay for my ticket, and I'll come out and I'll speak to you, no problem whatsoever. Or New York, for that matter. I'm open. I'll travel. I got a tongue. I can't. Will travel. What's that poster they used to have? Have, I don't know. Have dog, will travel. Or, have tools, will work. Here is the impulsive pattern off the top that I'm looking at. I know this wave 2 rally has been quite a burst. Didn't make a new intermediate high, which is interesting in terms of my count. But I can only surmise that if this is a reversal pattern building, that we will say 5 waves down next week, and we will see some sort of a right-hand shoulder here. So you got that left shoulder built, got a consolidation around wave B here, so that's coming in at about 108.50. You've got this head pattern building. You'll get another decline, challenge wave 4 about 103, and then a build up into 108 again. So you're talking about that kind of, choppy head and shoulders pattern building here. That is if that 118 high holds. So I'm reasonably hopeful here that we're seeing a reversal pattern build in crude oil, but would like to see a further, let's say, a momentum move to the downside now. Okay, let's go. Here's the S&P. This is the 4-hour S&P, and we have. I did think earlier on this week that we had a top in place for wave 2 here. Early in the week, then I changed to an alternate count for wave C of 2 here, so you'll see that in a second. Again, the same thing applies. We've got a wave 1 and 2, a wave 1 and wave 2 again. Lower degree expanded flat, to be interestingly enough, lower degree expanded flat, higher degree expanded flat. We've got this mirroring effect going on here. I think we will see wave 2. We may even see wave 2 top out today. We do have, at least we have a 38% retracement in wave 2. Get to the ladder. There you go. We have a 38% retracement in wave 2 done. I'd like to see, this wave C top out today. We might get a failed fifth wave in wave C. We don't know. We have that 50% target there at 42, 47 or thereabouts. Before a reversal happens in wave 3. I think, again, I'm looking at next week being a possible third wave down beginning. scenario. Third of a third, actually. Here you see the ABC. That's the expanded flat correction that I'm looking at. We do have 3 waves down in wave 4, 1, 2, 3, maybe a little fourth wave in wave 5 now. In the pre-market this morning, or the I suppose you're over in the States. It's 5 a.m. so it's the overnight still over there. So 3 waves down in wave 4, 1, 2, 3, 4, 5. By the way, if you're on Wall Street and you're watching this when you go into work, mark it in the comments there. I'd love to hear from you. It'd be very interesting to see, wouldn't it? Okay, so we've got 1, 2, 3, 4, and 5. And if your firm is looking for people to come and talk to them at their dinner, I really want to go to one of these fancy dinners. Okay, we've got 5 waves up in wave C of 2. If we get 5 waves up in wave C of 2 and we get some weakness around that 42.50, 42.40 area, it may even happen today. I mean, if we got a failed 5th wave today and a reversal today that breaks back below 40.70 again, then we'd probably be looking for wave 1 and 2 down into a 3rd wave. So suffice to say, I think we've got an ABC pattern up in wave 2, forming, if not close to forming, and we will see a bearish impulse wave to the downside next week, hopefully, with a bit of luck. Okay, I was speaking during the week about silver, not being convinced in the rally on silver yet. Now, the reason I'm not convinced in the rally on silver is the same reason I wasn't convinced with this rally in silver. We got a very sharp and you know, to be honest, quite impulsive looking rally in silver. We almost, you know, we pushed to a very close lower high at that. When was that? That was early April. That early April high, and I was still convinced that it was a wave 2 high and not a continuation of anything else. And we did get that nice long downdraft into wave 3, and we lost, you know, $5. We lost 20% on the price of silver over the ensuing couple of weeks. Now we have recovered after that impressive decline, and I don't think the larger pattern is done yet, even though we have rallied reasonably substantially off the low. You know, we've come again 10% or 13% off the low again. I still think that this is a 3-wave rally higher, and I think we will get a reversal into wave 5 again. So we will overall trace out 5 waves down in wave C, still looking, you know, ideally I would love to see a punch below $18 to finish wave 5, and then we'd look for a rally to begin. And I think it'll be a long-term rally then in a large degree 3rd wave in silver. But I think that will be the buying opportunity. I don't think we are forming a low here. I don't think that 2045 low is the low in silver, to be honest. I think we're in a 4th wave now, and I think we'll retrace all of the rally that we've had over the last few weeks. Here is the main pattern that I'm looking at. This B wave did confound me over the last week. I have over the last couple of weeks actually, but I think it's a B wave nonetheless. It's A up and A A down, and then 3 waves up in wave B. So we've got that A up triangle B wave, C up. So we've got ABC up in wave B, then 1, 2, 3, 4, and 5 down in wave C. Higher low, which means that this is a running flat correction in wave B, and now we're tracking 5 waves higher in wave C. I think we will top this out. If not today, I think we'll top it out early next week by Tuesday, and I think we'll turn down to begin wave 5 down before the end of next week. And that is my take on silver. Okay, Bitcoin, I think we have pretty much confirmed my suspicion that this is a 4th wave. I was looking at a 4th wave correction higher, very like silver. If you notice, it's been a kind of it's definitely a 3-wave correction higher. This 3-wave correction higher is taken as a 4th wave within wave 5 of C. So we do have a 5th wave down left to complete wave 5 of wave C. And much like early April, where I was tracking this 3-wave pattern higher in wave, another higher degree 4th wave, and looking for a long decline in wave 5, I am again tracking 3 waves higher in wave 4, looking for a long decline in wave 5. This next decline, you know, there is nothing holding it, to be honest. You can see here, I'm looking at the daily chart here, we've got this expanded flat correction in a B wave. So we had an A wave down back into the 2021 lows. We got a 3-wave rally in wave B back up into the late 21 highs, and then we're working on 5 waves down in wave C. And this next leg down has nothing holding it. That previous A wave low has held the price right now. So this has been support around that 29,000 level for Bitcoin. There is nothing holding it. You know, I think we could, in wave 5 down, we could fall back into about 10,000 again. We could even fall. You know, there's, like I said, there's nothing holding it. We've got this very tight range of trading into the February 2020 lows. And that's back at 3,000. 3,500. Don't be surprised. This is a cryptocurrency, and like every cryptocurrency, there's nothing holding it except, like everything really, there's nothing holding it except the faith of those people who are buying it. And a capitulation will turn every buyer into a seller. I think, we'll fill this trend channel, somewhere down around, 11 or 12,000, or even lower, maybe 10,000. But if we get down there, there's nothing that stops us going back into that consolidation low at 3,500. So, you could call me a complete idiot here. I may have it completely wrong, but I don't think this is worth touching with a barge pole at this point in time. I think we have a 4th wave correction pretty much complete here. I was looking for a little bit higher actually in wave C of 4. Actually, showing a different degree count here, but it doesn't really matter. It's the same concept. Forgive me. 3 waves up, 5 waves in wave C. A slight consolidation overnight there, but I think we should probably early next week we should take out that wave B low. That will begin wave 1 down of wave 5. So, right, where do we go from here? I think if we start seeing if we see an impulsive break of that wave below 27, call it 27,900, I think it's sayonara, and watch out below, because this could catapult to the downside very quickly. So watch out if you are a Bitcoin buyer. Okay, here's the Nasdaq. This rally off the low here has been viewed as a correction higher, and I think that view will be sustained today. I don't think we have a 3rd wave down complete yet in the Nasdaq. I'm looking at this as wave 4 of 3. So an A, B, and C, extended C wave again. We did pip to a very slight high in the overnight futures trade here. So maybe we have a top already in place for wave 5 of C of 4. The question now is, do we get a spike lower to begin wave 5 down? That'd be wave 5 of 3. We should see 5 waves down. We should at least see a break of 11, probably 11,400, and may even see lower prices than that. If we close out that trend channel, well, it'll probably be below 20. It'll be below 11,000 anyway. Maybe even into the 10,600 area to complete wave 5 of 3. So next week, if this count is correct, then we are going to see a significant decline begin again in the Nasdaq. Okay, that has done it, I think. Thank you all for watching, and as always, I usually end by giving you the good news of the Messiah. I know this is a real tilt for many people. I don't know, most people kind of click off at this point and, mouth off to me in the comments and so on and such and such. Anyway, that doesn't matter. I am compelled by the Great Commission to go forth and spread the gospel. The gospel is the good news that you do not have to pay for your own sin. We all know that we're sinners. God knows that I am. The whole point to the idea of the Messiah, back from Genesis 3, where God spoke to the serpent and said that, you will bruise his heel and he will crush your head. So the Messiah crushes the head of the serpent. And the way he crushed the head of the serpent is take the power of the serpent away. The power of the serpent is death. The power of death is taken away by the cross because somebody died in your place. You were never supposed to be. This was never supposed to be the situation that we have in the world, a falling, failed world, war breaking out all over the place, famines, pestilence. Go read Matthew 24 and see if it doesn't ring a bell of what's happening right now and what has happened over the last few years. The beginnings of sorrows, as Jesus said, was famines, wars, rumors of wars, pestilence, and that is exactly what we're seeing. So I think this is the beginnings of sorrows. I think we'll round that off nicely with a good, solid depression. And further war will break out. I was speaking last year of the war cycles turning up, and here we are, staring down at least 3 wars right now. There's going to be an Arab-Israeli war again pretty soon, most likely, and it's prophesied it's going to happen. There's going to be an attack on Taiwan. Turkey have launched into Syria again. Armenia and Azerbaijan are going to go at it again. God knows what else is going to happen on the continent of Europe. Okay, with that in mind, I would urge you not to find yourself under, the business end of a missile with seconds left to live, and then start thinking about your eternity, because at that point, it will be too late. Think about it right now. Do you want to go into eternity and you pay for your sin? Or would you rather enter into eternity and have your sin already be paid for? As Jesus said on the cross, his last words, "It is finished." He paid for your sin. It was paid for once and for all. As Paul the Apostle said, once and for all. What you need to do is recognize that the Messiah came, he died for your sin. Admit it, that you're a sinner. Believe that Jesus died on the cross for you. He's the Son of God. And confess that he is the Lord of your life. And by meaning that is your allegiance changes from the power of this world, which is Satan, the adversary, the fallen angels, to the power of eternity, which is Christ Jesus the Messiah, Yeshua, Mashiach, Ben David, Ben Joseph, Ben Elohim. So, if that has resonated with you at all, I would urge you to, think about it. Think about the eventual visit with death that we will have, that you will have, that we will all have. And if you have accepted the Messiah, Jesus, as your personal Messiah, then you can face eternity with confidence. Okay, that's that. That's the good news and bad news all rolled into one. It's Friday. I hope you have a good day. I hope you have a nice weekend. God's blessings to you all. And I will see you next week if I'm still here. Bye-bye.